Welcome to Optimum Solutions Methods of Overtime Calculation webinar. My name is Susan Warren, and I'll be your presenter today. We're going to take a 30-minute dive into the different ways of calculating overtime that are approved by the Department of Labor's Fair Labor Standards Act. Did you know that the FLSA is the most frequently violated employment law? Because of that, Department of Labor audits and FLSA litigation have gone crazy over the past couple of years. And today, we're going to help you get compliant. Here's our agenda for today. We're going to look at FLSA overtime premium calculation, just the basics. We're also going to look at weighted average overtime calculations. We'll look at salaried overtime premium calculations and commission overtime premium calculations, and also piecework overtime premium calculations. Now, for just regular old overtime basics, the Fair Labor Standards Act says that employees must be paid at least 1.5 times their regular rate of pay for overtime hours. And they, that is the Department of Labor, define overtime as hours over 40 that are worked in a regular work week. But it's not always so easy. As you saw from the agenda, there can be other conditions that affect the overtime calculation, like what kind of employee you're paying and or what kind of wage you're paying. For those regular hourly employees who simply get 1.5 times their regular rate of pay for their overtime, sometimes it's not obvious what their regular rate of pay is. Regular rate of pay is an hourly rate determined by dividing total regular wages paid for a week by total hours worked. Well, that sounds easy enough. Regular rate of pay, total regular pay divided by total number of hours worked. And you take 1/2 of that and multiply it by the number of hours worked over 40 to find overtime pay. But let's look at an example. In this example, Chester usually works 40 hours a week at $15 an hour, and last week he worked 56 hours. So to find Chester's regular rate of pay, we'd take his total regular pay, 56 hours times $15 for $840, and divide that by the total number of hours he worked, 56. So to find his regular rate of pay for last week, we'd take $840 divided by 56 to come up with $15, which is actually his normal pay rate. And his overtime hours, we have 56 minus 40 hours, so he worked 16 overtime hours. Then we'll multiply 1/2 of his regular rate of pay, $15 at 1/2, that's going to be $7.50, times his 16 hours of overtime to get $120 of overtime premium pay. We'll add that to his $840 regular wages to come up with a total pay of $960 for Chester for last week. Well, that one was easy. And my wish for you is that all of your overtime is like Chester's. But here's one reminder. FLSA bases overtime on a single 40-hour week. Typically, an employer is not allowed to average hours over multiple weeks. In this example, Chester worked 30 hours in week 1, 37 hours in week 2, and 50 hours in week 3. So to average those, he would have worked 39 hours a week. But FLSA wants the employer to always do what is in the best interest of the employee. And by averaging Chester's hours, FLSA, or the Department of Labor, who would be doing the audit in this case, would find the employer guilty of trying to cheat Chester out of overtime that was due to him if the employer averaged his hours and withheld overtime pay. The employer would have to pay Chester for 10 hours of overtime in week 3 in this instance. So you can't average hours over multiple weeks. Now, it is permissible for employers to exclude certain types of wages from the calculation of regular rate of pay. Some of those exclusions include gifts, paid time off. You don't have to include paid time off in your overtime calculation. You can if you want to. Expense reimbursements can be excluded. Discretionary bonuses that were not agreed upon or promised in advance can be excluded. Benefit plan contributions can be excluded from the calculation of regular rate of pay. Let's look at an example where Oscar earned a bonus of $25 for doing an outstanding job last week. He worked 42 hours at $12 an hour, but he also got a surprise bonus that hadn't been agreed to in advance. He didn't expect this customer service bonus of $25. So his regular rate of pay calculation is his total pay, 42 hours times $12 for $504, divided by the total number of hours that he worked, 42, to give us a regular rate of pay at $12. We're going to figure his overtime hours. 42 total worked hours minus 40 gives us 2 overtime hours. Then we'll multiply 1/2 of his regular rate of pay, $12, half of that is 6, by the number of hours he worked in excess of 40, which is 2. 6 times 2 is $12 for his overtime premium. So his total earnings of $504 plus his $12 overtime premium plus his excluded bonus of $25 gives us total earnings for the week of $541. Another very common overtime calculation method includes a weighted average. Now, in all my years of payroll, I've heard the weighted average overtime calculation called by many different names, but weighted average overtime calculation is what the FLSA calls it. And this would be used when an employee is paid multiple rates of pay in one work week. And if you're an Optimum software user, this is where you would use the FLSA flags on your earnings codes and on your employee master file. Perhaps the employee worked several different job classes, each with a different pay scale, or perhaps they worked a couple of different shifts so that they earned different rates for the different shifts that they worked. The regular rate of pay will be the weighted average of all rates paid to the employee during the week. Here's an example. Kobe normally makes $12.85 an hour, but last week he worked 14 hours in shipping for $13 an hour. He also worked 20 hours in the cabinet shop for $16 an hour. And he finished the week with 20 hours in the sanding room where he was paid $19 an hour. He worked a total of 54 hours and made a total of $882. To calculate his weighted average, his regular pay divided by his hours worked is $16.34. He worked 14 hours of overtime. 1/2 of his regular pay is $8.17. 817 times 14 hours gives us an overtime premium of $114.38. So his total earnings would be $882 plus 114.38, or $996.38. Now, employers do not have to use the weighted average formula. They always have the option to pay the highest rate earned for all hours worked. But note that the employer cannot simply use the rate earned during the overtime hours to pay for those hours. You must either pay the highest rate for all hours worked or use the weighted average for all rates to find the regular rate of pay. So I want to go back 2 slides to look at Kobe's hours again. We can pay him $19, which was his highest rate, for all of his hours worked. That would be the highest rate for all hours worked. And that would give us $1,026. And that would be acceptable. And in his case, he happened to be working the highest rate when he put in his overtime hours. This was the end of his week. But if he'd been working a $13 rate when he earned his overtime, you could not use that rate to pay him his overtime rate. That is not acceptable unless, and I'm going to catch back up with our slides here, unless the employee agrees to that in advance and some other conditions are met. And those other conditions are that average hourly earnings must be at least minimum wage, and extra overtime is paid on other earnings included in the regular rate of pay, and the hourly rate used for overtime is at least minimum wage and is the rate paid for work done during regular hours, and the hours paid as overtime actually qualify as overtime, and the number of overtime hours is at least the number of hours worked in excess of 40 in the week. It gets a little complicated if you don't just follow the regular weighted average overtime calculation. Of course, salaried, non-exempt employees can be paid overtime. The easiest way to calculate regular rate of pay is to divide the employee's annual salary by the number of hours worked in a year. Barry works 37.5 hours each week, so 37.5 times 52 weeks is 1,950 hours in a year. His annualized salary is $21,450. So his hourly rate would be $11 per hour. His normal overtime premium rate would be the half time of 1.5, or $5.50 for hours worked in excess of 40 in a week. Commission employees can cause a little bit of a problem when they also earn overtime in the same week that they earn commission, because very often that commission is not paid in the same week that the overtime is paid. Often, commission data is collected for a month and then calculated after an employee has been paid for regular and overtime hours worked. But once the commission is calculated, that means that payroll will need to go back and recalculate the commission employee's overtime, because now there is a commission wage that will change his or her calculation for regular rate of pay for the week when overtime was actually worked. Charles' regular rate of pay is $13.25 an hour, and he also earns a 3% sales commission each month, which is not paid until the first payroll of the following month. That commission is then allocated equally to each week of the month when it was earned, so that extra wage effectively increases his regular rate of pay for those weeks. So, if he worked overtime in any of those weeks, his regular rate of pay and his overtime earnings will need to be recalculated, taking his commission earnings for the week into account so that any extra overtime can be paid to him to make him whole. So let's look at an example calculation. In February, Charles earned his 3% commission on sales of $16,000 for a commission of $480. That was calculated in March. Looking back at Charles' hours worked in February, we see that he worked overtime in the first 2 weeks of February. So we need to go back and recalculate the overtime pay for those 2 weeks. Week 1, he worked 44 hours. His overtime premium rate was calculated at half times $13.25, or $6.63 for the overtime rate. He was paid for 4 hours of overtime at $6.63 or $26.52. Now we need to recalculate his overtime premium. So his regular pay was $44 times $13.25 for $5.83. His commission, now that we can reallocate it for 1 week, was $120. So his total pay would have been $583 plus $120 or $703. That gives us a regular rate of pay of $703 divided by 44 for a regular rate of pay of $15.98. Half times that is $7.99. His 4 hours of overtime at his new overtime premium is $31.96. We already paid him $26.52, so now we need to pay him an additional $5.44 for week 1. So let's see what we need to pay him for week 2 with this new overtime premium rate. We already paid him the $6.63 rate. So let's look at week 2 when he worked 54 hours. We paid him $715.50. Now we're going to add a commission of $120 to that. His total pay is now $835.50. His new regular rate of pay, dividing that new rate by 54 hours, is $15.47. Half times that is $7.74. 14 hours of overtime at his new overtime rate is $108.36. We already paid him $92.82 at his original overtime rate. So now we need to subtract I'm sorry, we already paid him $15.54. So we're going to subtract the difference. We owe him an additional $20.98 for the second week of overtime in February. So adding the 2 weeks of February overtime that we need to pay him on his first March check, we're going to give him an additional $20.98 on his first March check. So commission employees can cause you a little bit of backtracking. For piecework employees, there are actually several different methods that can be used for calculation of overtime, and they are approved by the FLSA. In the first piecework overtime calculation, you'd pay piecework wages, that is a rate times a number of pieces produced in a week, and then calculate the regular rate of pay by dividing total wages by total hours worked, and then calculate the overtime premium at 1/2 of the regular rate. Let's look at Cheryl's overtime for piecework pay. She earns $2 for every plate she paints, and she also earns a bonus $1 for each plate over 310 that she paints in her regularly scheduled 42-hour work week. She painted 343 plates last week in 42 hours. So here's the math. 343 times $2 is $686. She went 33 over her 310 scheduled, and she got $1 for each one of these, so we'll add another $33 to give us a total piecework earnings of $719, divided by her 42 hours for a regular rate of pay of $17.12. Multiply that times 1/2. We have an overtime rate of $8.56. Multiply that by her 2 hours of overtime, $17.12, to add to her regular wages of $719. Her total wages are $736.12. In the second piecework overtime calculation, first off, before anything, you have to have the employee's agreement to use this method, and I'll explain that in a minute. But in this method, you would pay the piecework wages, that's a rate times the number of pieces produced in a week, and then you would calculate overtime using a rate that's at least 1.5 times the regular piece rate for each piece made during any hours over 40. Robert agrees to make Robert makes $1.77 for every card he packs, plus a bonus of $2.66, which, by the way, is 1.5 times his regular piece rate of $1.77. He makes a bonus of $2.66 for each card he packs after he goes over 40 hours in a week. Last week, he packed 310 cards in 40 hours and another 77 cards during 7 hours of overtime. So here's how that all works out. So his regular rate of pay is $16.03. Now, here's why you have to have the employee's upfront agreement if you use method 2. While method 2 usually involves a higher bonus rate per piece, if you were to go back and use method 1 to calculate overtime and total pay using the same rates, you're going to get a significantly higher pay in some cases. So let's look at using method 1 to calculate Robert's pay. Piecework wages, 310 pieces times $1.77 is $548.70. Bonus 77 pieces times 266 is $204.82. Add those together, you get $753.52. Divide that by 47 hours for a regular rate of $16.03 times 1/2 is an overtime rate of $8.02 times 7 hours of overtime is $56.14 for a total pay of $809.66. But by using method 2 in this case, which Robert had agreed to ahead of time, method 2 only resulted in $753.52. But it does have a higher bonus rate than a lot of method 1 calculations often have. So there's some advantage to the employer to having employees agree to this type of method 2 calculation ahead of time. So you need to have the employees agree to this method if you're going to use it. It can be to the employee's advantage. Sometimes it is, sometimes it's not, just depending on the numbers that you're using for that bonus calculation. I'd like to thank you for joining us today. We hope today's webinar has given you a refresher on the finer points of calculating overtime and maybe cleared away some of the cobwebs on the not so obvious aspects of this payroll challenge. Please be on the lookout for more of our educational webinars soon, and email me if you have any suggestions for topics you'd like to see in future webinars. Have an optimum day.